Unadjusted trial balance.
Okay, so now we're gonna try to repeat what we've done in the classroom, but this time I'll try to go slower so those who have missed some information will have a chance to relook at it. So I'll do the first exercise, the same assignment that it is to journalize, post, and prepare an unadjusted trial balance. Now we have a few lines of information. We start with the fact that we have an investor who invests in additional 25,000 into a company, receiving stock in exchange. Again, we do not care what happened in the past. We care only about what is given, and we have to work with only this information. So let's assume that there was no balance before, and we have first investment or additional investment 25,000. To record the transaction A, I have to do entries into two accounts, and that is common stock. And common stock is an equity account, which increases on the credit side, so 25,000 will be recorded here. And we receive cash. Yeah, so it doesn't really specify, but based on the meaning, we can guess that this is an investment of cash. So cash is an asset account and it increases through debit side. So I'll remove the coloring because it is unnecessary. Well, this one as well. Okay. Now going to the second one, which is services are performed for customers for a total of 4,500. So what it means here in this line specifically, it says that we as a business provided service to customers. Providing service means we have made a sale. So I write here service revenue. And this is a revenue account. Revenue account increases through the credit side. So 4,500. Again, the color is unnecessary, but okay, I'll fix that later. 4,500 is a sale that we've made. That's it. All we have to record here is how much we sold or provided service. Now here, following that, we have the information that says that 60% was paid in cash, whereas the remaining 40% was billed to the customer. It means that he will pay it later. So paid in cash means we already have a cash account, right? So I think 60% from 4,500 is 2,700. We received in cash. Yeah. So let me just write here as a small note for yeah. So 4,500 multiplied by 60%. Yeah, that is 1 0 is extra, 2,700. And clearly the remaining 1,800 is going to be our account receivable. Also a debit side entry because we're expecting to receive it. Let me just remove again all of these colors. I think it was formatted this way. Yeah. So again, just look at, yeah, if I select this one and 2,700 in the sum, I have 4,500, and 4,500 we have provided service, except 2,700 from this we received immediately in the form of cash, whereas the remaining we will receive sometime in the future, 1,800. Okay. Moving on, transaction C. An electric bill was received for $35. Payment is due in 35 days. Again, it means, let me just clarify this part again. Receiving an electric bill means that we have spent this electricity. You also are homeowners. Your family also has electricity bill that arrives every single month. You received bill only after you use it. So the electric company calculates how much you use. They send you the bill saying this is how much you're supposed to pay. Now the same happens here. Here we can immediately, I'll just copy because I need an extra T account. So the electric expense already happens. So electricity expense, I recognize immediately because I have spent it, I've used it. So $35 will be recognized in my electricity expense, whereas the payment is due 30 days. So this is what I owe, and I haven't paid yet. It doesn't say anywhere here yet, at least in this line, it only says that I owe it. So I add account payable. I need to recognize the fact that I owe this much. And in my books, it has to be reflected in the account payable, $35. Now account transaction D, part-time workers earned 750 and were paid. Earned again means that, okay, I need extra T accounts. I'll just remove this data. Part-time workers earned their salary. Earned means that they've already worked, the month is over, I need to pay them. I need to recognize that the expense has happened. So salary expense is recognized on a debit side, don't forget that. Yeah, every expense account, as you can see, is recognized on a debit side, and they were paid immediately. And paid immediately means that they received cash right away. 750 is a cash payment to workers through the credit side of cash account. And the last exercise, or the last transaction, is the electric bill in C, meaning here, has been paid. So we already have the fact that we have recognized the electricity expense in our accounts payable. Now we paid it. That's it. Paying $35 means minus, yeah, we deduct cash. Again, I'll change the color back to black. Yeah, $35 we paid in cash. But what else we reduce is our debt. We don't owe anymore to the electricity company, yeah, for the electric bill. So I have to deduct from cash and annul my account payable because I don't owe them anything through this debit side. That's it. One of the things that you could do when you're doing this transaction is right next to the amount the transaction to which it belongs to. Yeah. So in the first case, we got it from A transaction. Cash also got from A. Yeah. This one, basically what I mean is that just for you to easily be able to track. So for example, if you're lost which one is this one, just next to it put a comma. Yeah, when we got the bill, which was here, so it was transaction C, we owed them money. Electricity expense also was in the C, and when we paid it, we annulled our account payable. It was transaction, oh sorry, E. Yeah, like that. So basically you can just slowly add all of them to this one. Yeah, let's see, 2700 was in B. Yeah, so 60% of 450, 4500. Salary expenses was from transaction D, and the cash payment was made in E. And this is sales revenue. This was transaction B. This one too. So we have a compound entry, yeah? So compound entry for transaction B because this has 3 entries. And the last one is salary expense, which was in transaction D. So that's basically it. This is how you can do it, at least for now. Now that we've finished journalizing it, what we have to do is post, yeah? And posting it basically means that we move the journalized information to general ledger. Here we're going to do it by balancing it out, yeah? So here somewhere on the bottom I'll write balance. For some reason I have it in Azerbaijani, so 25,000. Yeah, this is a balance. It's a credit account. It's a normal account. Unfortunately, because I've put this A, B, D, E, it's not going to automatically summarize it, so I'll have to do it manually. Okay, so I will balance out the each account. So we have here 26,915. Unfortunately, because I entered these letters, yeah, for each relative transaction, I cannot do it automatically, but manually also works. So balance here will be 4,500. Here again, because there is 0 on this side, so it's going to be balance. I need to change the language. Okay, 1,800. Here we have balance 35. Here we have balance 0. Yeah, balance 0. And the last one is the salary expense. Balance will be God 750. Yep, that's it. Now this is how we post the information from the journals to the ledgers. Eventually this is how the ledger will look like. So if you want to see each account separately, this is how you will see it, with the balances as well. Or if you see all of the transactions, all of the accounts, you can also see it this way. But basically you will be able to see the breakdown of each account and the balance of each account's final amount. Now we can just go to build our unadjusted trial balance. I will just do it with you so that you can see how it works. Unadjusted trial balance. The first information is common stock, and then we have cash. I'll just list basically every single account here. Service revenue, account payable, receivable, electricity expense, and two more, account payable and salary expense. So this is basically it, and I can add another line, and just specify here that we have debit, whereas on this side we have credit, and that's it. And just input the information from the balances. So 25,000 is our credit on common stock, 26,915. Service revenue is 4,500. And just one by one input the information. Account payable is 0, so it doesn't matter. And salary expense, usually you wouldn't just put it here because it's 0. Salary expense is 750, and that's it. Now I can just summarize the information on left side and the right side, and it will be exactly the same. So the total amount is here. That's it. This is how we build our unadjusted trial balance. Again, sorry, this is a bit messy, but very quickly we can actually bring in some order to it. It's very easy if you're used to it, but again, I'm not going to test you on your knowledge of what is it, Excel. So just take it easy, and that's basically it. So this is your unadjusted trial balance, and hopefully it was useful, and we will move on to do the second exercise. Okay, moving on to the second exercise, we're going to go through it step by step. This is a bit longer than the previous one, but this is as easy as the first one as well. So again, we will first journalize. Don't rush to build unadjusted trial balance. Go step by step. First journalize, then balance it out or post, and then prepare an adjusted trial balance at the end. Otherwise, you will make a mistake. Now, the business is started by receiving cash from an investor in exchange for common stock, 20,000. Again, we start with the common stock. No rush here. 20,000 is common stock, and we receive cash in exchange. 20,000 on the debit side. The business purchases supplies on account 500. So what happened is that they purchased supplies, right? Supplies have been purchased that worth 500. They purchased it on account, meaning that now they owe to someone account payable $500 cash. They owe to people, and they also bought furniture on account. Furniture also on account. 2,000 they bought, Don't confuse it. Supplies and furniture not the same. So create a separate account for each of those. Furniture separate, supplies separate. So they bought furniture for 2,000, but on account, so that we also added to our debt in the account payable to the credit side. Now the business renders service to various clients on account totaling 9,000. Now rendering service means providing service, and I'll just take a copy of another T account, maybe a couple of more, because we will need that. Now rendering service means that they provided service, service revenue account added. It's $9,000. $9,000 is added to our services account. That's it. All we have to do is recognize that we have provided that service in the services revenue. That's it. Now this service has been provided, or varies, services have been provided all in on account, meaning that they have opened an account receivable, and the customers owe them in total $9,000. And because this is my asset, we record it on the debit side. In the transaction E, the business pays salaries 2,000. Paying salaries means cash out, 2,000, and we recognize salaries, salary expense 2,000 on the debit side. Let's add more. Probably we will need this too. Business pays this month's rent expense recognized, 3,000, and cash is out 3,000. The business pays the suppliers purchased on account. So we're talking about, in this one, about the B, in the beginning, the company purchased supplies. Now, sometime later, the business pays for the suppliers purchased on account. So they basically paid back the debt for that account. Because it doesn't specify the amount, it's assumed that this is a full amount. So $500 has been paid for, so cash is out, and account payable amounting to 500 is also down. So this and this have to be recognized. And lastly, the business collects from one of its clients. If you remember, we said there was multiple, various clients, totaling 9,000. So one of its clients paid back, 1,500. So paying for the service means that, this company specifically received cash for the services they have done, and so account receivable has to go down by 1,500. And this is basically it. We have journalized all of the entries. Now we have to balance them out. I will stop writing here. I'll write only here, but everywhere I'll just write the amounts. 20,000 balance here. Here we have cash. So let's just summarize it. This plus this minus the credit side. One by one, 16,000 here. This is the balance. Let's just make it bold so it will be easier for you. And the account payable balances out as 2,000, 500 minus 500, and on the credit side we have left 2,000. Furniture is 2,000 on a debit side. Revenue is 9,000, because revenue, despite the fact that we received the payment, we still have provided the service, so this service stays the same. Now account receivable is reduced to 7,500. Salary expense, the expense recognized 2,000, and rent expense is 3,000. We also recognize it. So these are the postings that we've done. These are the ledger, general ledger, let's assume. And now we're going to build our unadjusted trial balance. Let me just copy the one from previous one example. I'll post it here and then make all of the changes. Unadjusted trial balance, debit, credit, common stock. We had it. It is, let me just remove the amount so it doesn't confuse you. Excuse me. I'll remove this. So common stock is 20,000. Cash is 16,000. Supplies, I'll add here because there isn't. Supplies 500. Account payable, we have here account payable, we have 2,000 for it. Furniture, no such entry, so I'll add one. Furniture is 2,000. Services revenue is 9,000 on the credit side. Account receivable 7,500. Salary expense 2,000. And rent expense, which we don't have, well, I can change this one, rent expense, because we don't have any electricity mentioned, so 3,000. As you can see, the total amount stays the same, no changes. So we have made correct entries. We have balanced out our debit and credit, and this is it. This is our unadjusted trial balance. Okay, so let's look at the third exercise that we've done, well, or didn't do in the classroom. This one is a bit longer, but again, it's worth to practice. It's very easy, but still we need to practice, so let's go with it. On January 3, 2019, the business issues 20,000 shares of common stock for cash. Again, we add common stock first. Yeah, we make an entry to common stock. A common stock is an equity account, increases on the credit side. Cash increases on the debit side, 20,000. On January 5, 2019, purchased equipment on account for 3,500. Yeah, so equipment was purchased, so it's a debit account. Yeah, it's purchased on an account, so it's an account payable. Our liability of credit entry 3,500. Next, third one, we receive 4,000 cash in advance from a customer for services not yet rendered. So the fact that it says received cash, it immediately has to click for you. It's 4,000 to the debit side of cash. We received it. We received it in a, now we have to consider what is the other end of this transaction. Yeah, we received it in advance from a customer for services not yet provided, not yet rendered. Not yet rendered is unearned revenue account. This is our liability. All the revenue is always on a credit side, but we have to recognize that we haven't earned this revenue, so it has to be recorded on the credit side, 4,000. But it has to be an unearned revenue. Yeah, so if you earn it, it's a revenue account. If you haven't, then it's unearned. Next, transaction 4 provides 5,500 in service to a customer who asked to be billed for a service. So this is a different customer. We provided a service, so services, service revenue. Worth 5,500. Revenue is a credit account, so we recorded on the credit side, yeah, increase on the credit side. And the customer doesn't pay right away. He wants to be billed, so we create account receivable. Means that we've provided the service, we did our job, now the customer owes me money, and that's my asset, 5,500 on a debit side. Moving on to transaction 5, on January 2019, pays $300 utility bill with cash. Utility bill, utility expense is immediately recognized. 300 expense on the debit side, and it says that we pay in cash, so cash out 300, and we record it here. Next, on January 2014, we distributed $100 cash in dividends to stockholders. Distributing cash means cash is out, so how much was it? $100, and we create a dividend account of 100 recorded here. Now, on January 17, we receive 2,800 cash from a customer for services rendered. So we provided services for services rendered. This is so this is a new service that we've provided. I think, yeah, 2,800. Service revenue 2,800. Is it? Just a second. Yes, it is 2,800. And we received cash. Receiving cash is increase in the cash account. That's it. Let me just mark this one because I want to go back to this later. Now, on January 18, paid in full with cash for the equipment purchased on January 5. Yeah, on January 5, we purchased $3,500 worth of equipment. If you remember, we recorded an account payable because we owed for it. And now in January 18, we paid in full with cash. Paying full in cash means 3,500 is out. Yeah, and we have to close our liability by entering on a debit side account payable. On January 20, paid 3,600 cash in salaries expense to employees. Now we have to recognize salary expense. How much? 3,600. And it says that we paid in cash. Yeah, paying cash means cash out on credit side. On 23rd, we received cash payment in full from the customer. On the January 10 transaction. January 10 transaction is this one, 5,500. Yeah, which meant that we had to record it on account receivable. Now, after 10 days or 13 days, we received that payment. Receiving that payment means we received cash, so cash in. Let me remove this. And our sort of asset in account receivable, so no one owes us anymore. We close it through the credit entry on account receivable, and that's it. And then we have 27th, provide 1,200 in service to a customer who asks to be billed for the service. So again, we provide service. Provisions of service is 1,200 on the service revenue. And the customer says, please send me the bill. So he says, I will owe you the money. So we record it to the account receivable. And lastly, on January 30, we purchased supplies on account for 500 and payment is due within 3 months. Purchasing supplies, yeah, we don't have that account, so I'll create another one. What did I do? Copying and pasting. Yeah, so how much? For supplies account, and we bought supplies for 500, and now we owe them. Yeah, on a debit side we made a $500 entry. Now we say that it's on account I owe to the vendor, and I record it on account payable liability side, which increases on the credit side. That's it. This is all of our entries. There's nothing else to add. There's only one place that I want to return to, which is this one. Now, some students get confused about whether this is, let's say, on January 17, receives 2,800 cash from a customer for services rendered. So some students make it connection to this one, yeah. But in this case, it makes no sense because it doesn't specify here. If only it specifies saying that on January, which is 10, the customer for whom we provided 10 service pays cash, only then we would connect this transaction to the 10th, just like it was done in here. As you can see, they clearly say on January 10th. Yeah, they link this transaction to transaction January 10. But because here it doesn't, we just culminate, assume, or take it as for granted that this is a completely new customer, this is a different transaction, and we have to record it separately. All right, so I hope this was clear. Make sure that you understand that part. So no line of information is going to be confusing. Every line of information is going to be as clear as it can get. So we had a couple of, this line that was in reference to a previous transaction. There was another one, let me just see. We paid full in cash for the, you see again, this line also is linked to the previous transaction that was here. So there is always going to be some kind of reference to the previous transactions. If there isn't, it means that this is a new transaction and you have to make a new journal entries. All right. Okay, so we have basically made all our entries. Now we balance them out. 20,000 common stock. Let's balance out our cash. We can just one by one add them. This one, and then minus the credit side. Don't forget to minus it. Don't forget to deduct the credit side, yeah, 24,800. 3,500 equipment doesn't change. Here we have 500, 4,000 on the unearned revenue, and here we have the summary of this. Oh, I always do the same thing. Yeah, so add this, and the last one is going to be, there is no change. Yeah, okay, 300, 100, and 3,600. Yeah, and 500 for supplies. So this is it. This is our posting. We posted all the necessary information. Now we have to prepare again an adjusted trial balance with already information that you have. This is why I ask you to do the journalization first. Don't rush into, rapidly to do the unadjusted trial balance, because you might make a small arithmetic mistake or miscalculate something. So it's better to do the journalization first. Now again, for easiness of it, I'll just copy and paste this table to this new one and just start adding the information. Yeah, common stock doesn't change. Let me just remove these lines. Cash, we have 24,800. Equipment, we don't have furniture, so I'll just remove that. So equipment is 3,500. Account payable, we have here already, how much? 500. Unearned revenue, I'll add because we didn't have that. Unearned revenue was 4,000 on credit side. Service revenue, 9,500. Account receivable, here it is. It's a debit account. Utility expense. 300. Dividends, let's add another line. Dividends, 100. And salary expense we have here 3,600. And supplies I had here unused 500. Okay, so I made somewhere a mistake, so let's take a look at that. Where did I make a mistake? Account payable. Correct. Oh yeah, here. Account payable is a liability, so it has to be on this side. And as you can see, very easily I fixed the mistake because there was, yeah, let's go back. I misplaced account payable, which is actually a credit account balance. Yeah, normal balance is on the credit side, which in fact it is here as well. I by accident typed it into the debit side. Once I fix that mistake, yeah, the balance is restored. It's 34,000 on each side. Again, very easy. Once you finish correctly journalization of all your entries, unadjusted trial balance is very easy to come out to be, correct. That's it. Moving, let's just do the last exercise and that will be it. So there was a small mistake I just noticed in the final exercise. So it said January 1, but in fact it's actually September 1. And make sure just to fix that mistake. Otherwise there will be some misunderstandings, and I would have to explain it in a bit different way. But let's just go with September 1. And the first transaction says stockholders invested 20,000 cash in the business. Common stock increases through credit. That's 20,000. Yeah, so we sold out common stock. Now we received cash in exchange, and cash increases through debit, so 20,000 there. Second, on September 2, we paid $1,000 in cash for rent for that month. So the month of September just started, but we paid 1,000. Yeah, paying $1,000 cash means credit cash. On the other hand, we prepaid rent. Yeah, we prepaid rent, and that is our asset in the form of debit side entry, 1,000. September 3, we purchased industrial carpet cleaning equipment for 25,000. So cleaning equipment we bought for 25,000. That's our debit side entry. Now we paid in part using cash and in part notes payable. So what we do is the part that we paid cash, we credit 10,000 and we add a note payable. Note payable is a credit entry of 12,000. That's our liability, and 15,000. And so if you look at it, credit side entry is $25,000, whereas the cleaning equipment purchase is a debit on 25,000. Now next is September 4th, we paid 1,200 for 1 year accident insurance policy. For 1 year accident insurance policy, it implies we have prepaid insurance. Prepaid insurance is our asset, and we record it on the debit side, and we paid in cash, so that's a credit entry to cash. September 10, we received bill from Daily News for advertising the opening of cleaning service 200. So that will be advertising expense will be on a debit side entry 200 and credit cash 200. No, wait, received bill for the opening. Okay, we didn't pay cash. We recognize the expense. Receiving bill means that we owe it to them. So account payable will be on a credit side entry 200, not cash. Yeah. September 15th, we performed services on account. So we provided service, and that we have to recognize on the credit side of service revenue 6,200. And we performed it on account, meaning that our customers owe us money. And that's my asset, 6,200. Next, we paid $700 cash. Paid $700 cash means cash credit. Dividend to stockholders. So I record in a dividend account 700 on the debit side. And finally, we received $5,000 from customers billed on September 15. Received 5,000 means cash in through debit. From customers billed on September 15th. September 15th, so for the 6,200 amount, we received 5,000. So account receivable will reduce through credit side, means that we are owed less by that, and we received cash 5,000, and that's basically a two-sided entry, and that's it. Now we finished journalizing. Now we can post it. 20,000 common stock balances out. Let's just a bit lower. I'll input the sum of the debit side minus the credit side one by one. Although we could also use the shorter formula. Finally, we have, not finally, but continued, we have 1,000 for prepaid rent, 25,000 of cleaning equipment is there, 15,000 in balance for note payable, 12,100 for prepaid insurance, 200 our advertising expenses, 200 account payable, 6,200 for services revenue. Account receivable, on the other hand, is reduced because we were owed 6,200, but then our customer paid at 5,000. So it's now 1,200. Our balance on account receivable. Our customer still owes us 1,200. And finally, the dividend is 700 in balance. Now that's it. We have posted it, and now this is our general ledger. We basically input these balances and accounts into the unadjusted trial balance, which I've already prepared here. And the information is just common stock is 20,000 on the credit side. Our cash is 12,100. Then we have prepaid rent of, how much was it? 1,000. We have cleaning equipment, 25,000. Cleaning equipment. Note payable is 15,000. That's on the credit side. Prepaid insurance is 1,200 on the debit side because this is our asset. Advertising expense Here it is, 200. Account payable, that's our credit side entry, 200. Service revenue, 6,200, that's a credit side entry. And account receivable, 1,200. Yeah, 1,200 to the debit. And finally, dividend is on the debit side, 700. And as you can see, our credit and debit is balanced perfectly, and yeah, which means that we have, at least to some extent, we didn't do any mistakes. This is all correct entries, and that's basically it. This is our last example, and hopefully it was very useful. And we'll start next week continuing, doing accounting cycle, but we will start doing adjusting entries. So that's it for now. Hopefully it was very useful.